Hey, astronauts, welcome to the Digital Galaxy podcast. I'm your pilot, Justin.
And I'm your co pilot, Paul. Buckle up because today in episode 28, we're discussing Robinhood and the fallout of free share trading. The information in this episode comes from the Wall Street Journal, Robinhood.com, and CNET.com. So, Justin, can you explain to the crew what happened last week?
Yeah, a lot of stuff happened last week. A lot of people thought the whole stock market was going to crumble, but
For sure.
here we are, still thriving. But several hedge fund managers were upset when Reddit users bought up tons of shares of GameStop, AMC, BlackBerry, and a few other companies. The hedge fund managers had shorted these companies' stocks. This means that they purchased options betting these companies would fail, which usually drives down the share price. The
Mhm.
opposite happened because Reddit users purchased all the stocks, driving the price way up. The hedge fund managers would have to buy those shares at a way higher price
Mhm.
than it was originally. So they created inflated prices on those failing stocks.
Yeah, so what do you mean by the hedge fund managers had shorted these funds? Can you explain what short trading is?
Yeah, a short trade is when you borrow a stock, usually from a broker, and sell it quickly at its current price. You
Mhm.
hope the stock price falls so you can buy it back immediately at a lower price and return the shares you borrowed to the broker. You keep the difference of the sales, more or less. So,
Mhm.
Robinhood then halted trading on all these stocks because the excessive purchasing drained their funds because there's a fee for every stock that is traded.
Right, yeah. I used to have a Robinhood account, so I still get their emails. I'm sure you saw the long email they
Yeah.
sent in response, right? Yeah. Um, I'll share what that response was. It's a little lengthy, but it's worth going through the whole thing. So this is from Robinhood. Quote: We wanted to reach out to you after a transformative week in the markets to answer a question we know many of you are asking. Why did Robinhood limit certain stocks? We understand that the temporary limits were placed on certain stocks this past week were frustrating for many, especially since we built Robinhood to expand access to investing. We have always sought to put our customers first, and we want you to be able to invest on your own terms. To help explain what happened and why we had to take action, we wrote a letter to our customers and captured the key understandings for you below. For Robinhood to operate, we must meet clearinghouse deposit requirements to support customer trades. Deposit requirements are determined in part by how much stock a firm's customers hold. If a firm's customers' holdings are volatile, a broker, in this instance Robinhood, is obligated to meet higher deposit requirements. Last week, in part due to a volatile market in some popular stocks, Robinhood's deposit requirements rose tenfold. The combination of the deposit increase and the extraordinary increase in volume on those particular symbols led us to put temporary buying restrictions in place on a small number of those stocks. We had to take steps to limit buying in those volatile stocks to ensure we could comfortably meet our deposit obligations. We didn't want to stop people from buying stocks, and we certainly weren't trying to help hedge funds. We hope you take away this. At Robinhood, we stand with everyday investors participating in the markets. Standing by our Robinhood community means being there for our customers trading any for our customers through any trading environment. We'll continue to improve as we break down barriers in the financial system to it open for all. Man, that was a long, that was a
Yeah,
long statement.
they covered a lot of
Uh,
ground.
it did for sure.
So, I mean, a lot of people are upset with Robinhood right now.
Hmm.
It's already facing more than 30 civil lawsuits regarding the matter.
Hmm.
According to the Wall Street Journal, quote, one of the lawsuits filed Thursday in the Southern District of New York by an individual investor alleges that Robinhood deprived their customers of the ability to use their service as well as potential gains from trading for no legitimate reason, end quote.
Hmm. Even some action has been taken in other forms. According to CNET.com, quote, Robinhood users flooded the Google Play Store and Apple's App Store with the negative app reviews. There were so many one-star ratings that Google intervened to to remove tens of thousands of them, end quote.
Yeah, Robinhood wasn't the only brokerage halting trade. Axios, Webull, Charles Schwab, among others, stated they limited trading due to market volatility, which is, I mean, that's I can understand why.
I can understand why too. I'm sure it was a crazy situation for all involved. It
and it,
did.
yeah, and it kind of
Go ahead.
happened overnight. Like,
It for sure did. It definitely exposed a lot of things that I'm sure people were questioning about, fairness in the stock market, and even if it was done purposefully, it definitely showed a lot. Like it brought a lot to light. I feel
yeah,
uh,
definitely.
for individuals trying to invest with these apps for sure.
Yep.
Are you still trading with Robinhood by chance?
I am not. I closed my account and I started trading with other brokerages.
Interesting. Yeah, I closed mine a couple years ago, just because I don't know anything about trading.
Yeah.
But it was definitely interesting to see this happen because Robinhood I thought was pretty user friendly. Of course, that's why I tried it out.
Yeah, no, it
But yeah.
definitely is. It's definitely probably the simplest, stock market app other than like, Acorn or something like that.
Hmm.
Um, but no, I mean, it is a phenomenal app, but I don't know. They just kind of showed their head in a not so nice way.
Absolutely, absolutely. So, in summary, Reddit users influence the stock swinging prices of GameStop, AMC, and other publicly traded companies, causing chaos in the stock market. Investing apps like Robinhood that specialize in short trading halted and limited purchasing of stocks as a result of the fees that were associated with trading those inflated stocks, limiting people's opportunities to trade on a level playing field. Robinhood, among other brokerages, are facing civil lawsuits and are facing scrutiny because hedge fund managers were still able to trade freely on the platforms while it limited others.
Yeah, well, that about wraps it up for this episode, guys. Don't forget to follow our channels on Twitter, YouTube, Spotify, Google Podcasts, and iTunes. You can also find this episode in the written form on our website, digitalgalaxypodcast.com. This episode was created by Clearo, a social media app where you are in charge of your data and community. Check it out at clearo.app. Thanks for coming along on our journey, and we'll see you guys in the next one.